Hi there, this is Pat McDonald, your host for Vote for Vermont, where our tagline is listening beyond the sound bites. Ben Kinsley is joining us today in the studio. Welcome.
Hello.
I like seeing you here. It's nice.
It's good to be seen.
Yeah, it is. Well, that's my line at my age. You can't steal that. Anyway, all right, we have a very special guest tonight. His name is Ethan Frost, and he's the founder of the Cryptocurrency and Decentralized Finance Club at UVM. Plus, he's a student at UVM. Welcome.
Hello.
This is so this guy knows everything, I think, about Bitcoins. I had actually talked to him once before about this and almost understood it.
Understood it.
Almost. Well,
Almost.
because I would ask a question and I'd get it, then I'd be, I know this, and then I'd ask another question like,
I don't know
I
this.
don't know this. So pay attention, there'll be a test. So
Excellent.
welcome. Could you tell our viewers a little bit about yourself?
Yeah, sure. Yeah, so my name's Ethan. I'm from Burlington, Vermont. I go to the University of Vermont. I study finance and economics, and I've always had a big interest in technology, building computers when I was a kid, and I got word of Bitcoin when I was around 13, and I didn't do anything about it. But eventually I circled back around to it, and it turned into a passion and interest of mine. And so, yeah, since then, it's just been something I've always
That's great.
gone back to.
Do you notice he said emerging technologies? That's sort of right up your alley.
Yep.
And Bitcoin is an emerging technology, is it not?
Right, or the blockchain, the technology
Blockchain, sorry.
below it is what you would consider as the technology.
That's cool.
Yeah.
That's great.
Yeah, I think Bitcoin's more of a financial. You can look at it in a couple different ways. One way is it's a financial product.
Right.
But the technology that supports that product is blockchain.
Right.
Right. That's kind of the underlying.
Is Asher Crispus a gentleman we work with? Is he an emerging technology guy?
Yes, he is.
Because I think Ethan would love to
And
sit
he's very
and talk to him.
into crypto and other things as well, for
Yeah.
sure.
This guy, he works with us. His name is Asher Crisp, and the emerging technology is sort of, what's his fancy title?
He likes to call himself a technology futurist.
Yeah,
That's what he calls
futurist.
himself,
There you
Yeah.
go. So you'd
Yeah.
like to meet him. We'll get to arrange that. But anyway, speaking of blockchains,
Yeah, so I think like you said, emerging technologies is kind of a broad scope
Right.
of things. Cryptocurrency is one of them. Blockchain is part of that. What kind of other what's your definition for emerging technologies, and then what other things in there are you interested in besides crypto?
Right. So I guess if I were to define emerging technologies, I would say it is a innovation that is almost poses a existential threat to things that we use on a daily basis, like in a large scale, like a car is to a horse. And so as far as examples, nowadays, of course, you have blockchain with crypto, and it's changing the way we look at how information and value can be distributed in a digitized network. But of course now there's also artificial intelligence has really now hit the mainstream. Of course, it's been something that's been going on for decades, but you now have something like ChatGPT, which is now enabling 8-year-olds to write in-depth papers that now raises a lot of questions about how we go about teaching people, teaching children. And so there's other ones, you have like, human genomics and modifying DNA, all these crazy ideas. But for me, what interests me in that, it boils down to the fact that it's, one, they're bold and they're interesting in what they are, but they're also a look in some ways into the future. And also it's fascinating to see how people's visions and narratives that are created around these technologies change, and sometimes there's a lot of irony within that as well.
Yeah, I think some of the interesting things I think we're seeing right now, like you pointed to, we seem to be moving towards a place where there could be general artificial intelligence. These large language learning models like ChatGPT are really good at crunching large data sets. They're not very good at being accurate at this point. What they're looking for are patterns. So if there's something that is repeated, like a misconception or or misinformation that's repeated in multiple places, these large language learning models can pick up on that and end up giving you unintentionally false
Oh,
information.
that becomes the truth?
And then right. So
right.
those are the sorts of things that we still have to be careful of with.
Exactly.
But if you can utilize these tools to do an incredible amount of work very quickly.
Right.
I like the thing on the list here about the 3D printing, where you can make guns. I mean, what is that? That is, I'm sorry, that's a little.
You can only fire it once
Yeah.
though.
Oh, really?
Yeah,
Oh.
it self-destructs typically. Like
Is that really? Or
you can.
because it's paper, right? I mean,
Well, it's plastic.
Oh.
So you typically the barrel melts after the first shot.
Right.
So
well, that's sort of encouraging.
Yeah.
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 Except if I was in front of the gun with the bullet. But anyway, I
Right.
just find it interesting. But so let's talk bitcoins, because that's why you're here. And you explained to me that there is no one person who came up with this idea, that they think it's a multiple of people that started the pseudonym Satoshi Nakamoto.
Right. So there's a few theories there. And so basically when the Bitcoin white paper, the thesis, the genesis of Bitcoin, the paper that was written about it, that details how it works technically, and also just the fundamentals behind it. And it also sprinkles in a bit of political commentary almost about how it circumvents traditional financial systems as well as the government. And so with that, of course, there's an anonymous alias that is said to have written it. And so some people think it was a group. Others people think whoever it was died. But the one interesting place, if anyone is curious about looking into the rabbit hole there, there's this man named Nick Szabo, who at the time and prior was experimenting with blockchains in different ways and actually invented something called a smart contract, which without getting into detail, is basically a blockchain contract. And the only speculation besides the fact that he has the acumen and he was around at the right time is also some people think that the writing style of the paper is very similar.
So he could have
plot
been
thickens.
one of the authors potentially,
One.
if not
Yeah.
the author, right?
Yeah.
So at a super high level, there's traditional fiat currency, which people are probably familiar with. This is, the U.S. dollar, the euro, the British pound, those sorts of currencies, which increasingly are digital, right? There's not a few trillion U.S. dollar bills running around out in circulation.
Right.
A lot of that currency actually is digital. It's bits and bytes that are somewhere in a bank server. So that's where a lot of those dollars end up being, and some of that portion of that is guaranteed by the federal government.
Because it used to be backed by gold, but now it's just full
No.
faith and credit. Right?
No, full faith and credit.
Yeah, right.
So
but
there
it
is.
used to be gold, but not anymore.
Yeah, well, you couldn't build a
place.
a bank big enough to
Right,
hold all the
exactly.
gold.
Right.
But the point being, a lot of the fiat currency is also digital now, right? What's the fundamental difference between that fiat currency and cryptocurrency that's based on a blockchain?
Right. Well, you said it, the blockchain, right? So traditional fiat currencies that are digital, and I'm not, I don't know too much about it, but there's these different systems like an automated clearinghouse and these ways of checking and verifying financial transactions. And in legacy or the status quo for digital currencies, and I mean U.S. dollars or euros, it is done through centralized servers, and the trust of the system is in banks and also in the Federal Reserve and other government financial institutions. But with a blockchain and with a cryptocurrency, let's just say Bitcoin, it has no oversight or central authority. Instead, it relies on a decentralized structure to verify and prove transactions, which there's a lot of layers to it, but essentially, instead of having a few people in power or not people, or corporations in power, and that verify transactions in a digital way, which is slower. Instead, it's all done entirely digitally.
So, for example, I go put $1 in a bank, and I'm trusting that bank to hold that dollar. Right? They're going to hold on to it, and that dollar, after I deposit it, essentially becomes digital. It's backed up by the bank's server, who says, yes, Ben has this dollar in our bank. There's, but if something happens to that server, right, either the bank goes in and like someone in the bank goes rogue and goes in and changes ledgers, if the server crashes or gets hacked and someone changes that ledger, there's not much of a recourse for that. It's hard to reconstruct what was actually there before, right? I think the core difference between having an institution like a bank, my understanding is, and having those transactions recorded on a blockchain, is that the ledger is public. Everyone can see it.
Right.
Everyone knows that. Everyone who's looking at the ledger can tell, oh, Ben deposited this dollar in the bank, and it should be there. And if the bank doesn't have it, well, bad on them, and they owe Ben the dollar back.
Right.
Yeah, I wish that we're talking about Bitcoins, but the bank that just failed, and by the way, we're videotaping this March 16th, because tomorrow's St. Patty's Day, correct?
It
There
is.
you go. But it was a liquidity problem, and does that mean that, I'm going to do it quickly, I don't want to take go
yeah,
ahead,
so
do that.
basically banks, in order to make money, they take your money that you deposit and they invest it. And there's government regulations that require banks to have a certain amount of money in the bank, and then the rest they can play around with, and if they need money in a pinch, they can ask other banks, and it's this circle of cash that works really well traditionally. However, due to regulations, the fence has been lowered in the past, and it is easier for banks to get away with not having as much money or liquidity on demand. And so with the way the market's been trending, and there's a lot of speculation of we're currently in technical terms in a recession,
Right.
In terms of GDP growth. There's these lending practices that these banks have been enabled to do in the last few years, along with the federal interest rates being lower. You're now seeing the cracks start to show. And these banks that have been lending way more money than they feasibly should be are getting called out. And as a result, when the word gets out that a bank might be failing, everyone runs to the bank.
Yeah, you get a run on the bank.
And you get a bank run. So in the case of the recent news with Silicon Valley Bank, it could be argued that had to do with fundamental issues with the bank. However, there's other banks now, such as First Republic Bank, that are having to get liquidity support or cash on hand in a way that's leaning towards more of a speculative reaction as opposed to an actual flaw with the bank.
An actual flaw, right? So like this is one of those situations where we saw this, back in the first Great Recession, where these bank runs, because people are losing trust in the institutions, right? And we're starting to see a little bit of that, those cracks starting to show, where you had one institution that just outright failed because of bad management practices. Right. But now we're in this like hyper-aware moment where if any crack starts showing in a different bank, or even someone even starts speculating, right? Someone starts a rumor that, oh, this bank has liquidity issues, and it causes a run on the bank, even if the bank doesn't actually have liquidity issues.
Right.
So Bitcoin, you can't hold it in your hand. It's just it's
totally digital. There's no
so this
physical
one bank
version.
had a lot of Bitcoin, had a lot of trading in Bitcoin or whatever, working in Bitcoin. If it failed, that can't fail, can it?
The Bitcoin's still there. So when these banks fail too, they still have cash on hand. They just don't have enough. They have assets. And so that goes down to the FDIC, Federal Depositors Insurance Committee. to delegate that value, and so Bitcoin's just one of the many assets that'll just be on the balance sheet.
But the FDIC doesn't cover your losses in Bitcoin, does it? That's not part of, it's just,
That's a great question.
Yeah,
I don't
I
think
don't-
they've had to deal with before.
Right.
no,
I
because
mean,
it's up to 100,000, right, for each depositor?
It's a quarter. it's
250,000.
250. It's a quarter
that's-
million.
See, I haven't been paying attention. That's changed in my lifetime.
Right.
It used to be 100,000 when I was paying attention. Oh,
Yeah,
but
it's a
yeah,
quarter million.
I mean, they'll liquidate all the assets, and just like they're doing with Silicon Valley Bank, it's getting auctioned off.
so they'll sell the Bitcoin, liquidate
so
it.
it's like selling paper to just somebody else buys the.
Right, or if they have stocks.
Oh,
Yeah,
okay.
same,
Same-
it's
same
same
thing.
concept. They
They're
have
not a stock,
Right,
but they're an
with this
asset.
conversation, I would feel comfortable being in the Bitcoin business, but then we're going to talk later and I'll
Right.
change my mind. So there you go. So you just go ahead.
Yeah, so I think one of the things it's interesting. So we talked a little bit about the ledger, where that ledger for cryptocurrencies is public, right?
Right.
And one of the advantages of that is you can see if there's not really truly banks for Bitcoin at this point, but there are financial institutions,
Of course,
that transact in Bitcoin. But you could see potentially, in theory, if one of them is becoming over leveraged, because looking at that public ledger, right?
Right. To some degree. I mean, if a bank were to be dealing with Bitcoin, if they're a Bitcoin bank only, yes, but if they're dealing with other assets,
It starts getting difficult to
it
track.
starts getting harder.
But you can't change anything on the ledger. That ledger is like
Yep.
etched in stone, right?
They call it immutable.
Immutable.
Yeah,
right?
it cannot be changed.
And you said that at the beginning there was an issue of duplication, and now that's been fixed, or it's sort of double spend.
Right.
You can't do that anymore.
Right. So that's you can think of that in some ways as it was a breakthrough. So with digital currency, for the longest time, I'm not really particularly sure what that means, but it feels like for the longest
Yeah.
time, we had computers for 2 decades and we weren't able to figure out how to do a digital currency that was it was autonomous, meaning
Right.
or like it didn't need anyone in charge, because just like if you had a Word, you had a Word document in a folder, who's stopping you from copying it and then sending those two to someone else? There's no one's like being like, hey, you can only have one of those.
Right.
And so the double spend problem is basically that. How can we stop people from sending the same Bitcoin to 2 different places at once? And so that's what gets into the consensus mechanisms and the different technical things that blockchain is able to do. So you could think of it almost like a breakthrough in a different technology. It could be like how Henry Ford, he didn't invent the car, but he improved the supply, what is it called? The
Manufacturing process.
Yes,
right.
With the
Assembly line.
assembly line.
Assembly.
Yeah.
Oh,
Right.
Right.
And so it's it was a modification to the overarching technology that they were working at that proved to be
And there's a
the
couple
solution.
consensus models that we may get into
Right.
here. But I think the idea is that the ledger is public, but it's also distributed, right?
Yep.
That's kind of the key piece.
Okay, back up. What did you just say?
So it's public. It's a public
Sorry.
ledger.
Yeah.
Everyone can see,
Yeah.
right? But it's also distributed, so it's not in one location. There's multiple.
So there's nobody in charge
Right.
of a ledger.
Correct.
It's
There's-
just,
That's like
there's-
the decentralized. The terms are thrown around interchangeably a lot of the
Yeah.
time in some settings. I mean, there's technical ones.
I have
but-
to say, I keep listening, and all I have in my head is this group of people that go under this Japanese guy's name, puts it on somebody's desk, he doesn't know where it came from, looks at it and goes, whoa, what a great idea. How does that work? I mean, if somebody put a proposal on my desk, I would want to know who wrote it and who's in charge, but there's nobody.
Well, that's the point in essence, and that's
Wow.
why there'll never be another Bitcoin, because it's too late now.
Yeah.
And it was the first, and it's just in its nature. The
Yeah.
point of it is it's simply put, it's a digital currency. It can store value. You can exchange. You can trade with it. You can
Yeah.
transfer it. You can you can do other transactions with it, but there's not much more to it.
Oh.
And so, with the fact that it's supposed to be away from any sort of overarching authority, by design, they don't want. They just use the name.
Yep.
That was it.
Interesting. Really, I'm actually getting this. Go ahead.
So
I'm getting excited that I'm
this
understanding.
distributed ledger means that, okay, so in the banking world, right, the bank holds the ledger, right? They
Right.
know what their deposits are, they know what their assets are, they know what their what credits they owe, and they're the ones that hold the ledger. But in a distributed ledger, there's not just one ledger. There's actually multiple copies of that ledger. They're all public, right? And that's the blockchain. The blockchain is really the series of ledgers that are all stored, and there could be, what's the number right now that are out there
Of ledgers,
of numbers of copies and the
full
block.
nodes,
Yeah, the number of nodes for the Bitcoin.
thousands. I'm
There's
pretty
thousands
sure.
of them. Right?
Yeah, I mean, anyone, if they have the storage on their computer, could become a
So
full
these,
node.
the blocks get a maximum capacity of transactions or whatever, right? And then you develop a new one.
Right, and
Let
so it's
that grow,
added to the chain.
And then, all right,
Right, and so it's basically a big, like, in medieval times they have those big, like, almost like paintings that tell a story of history.
Right.
It's like you
Right.
look from left to right. You can think of every block as added and as it goes.
Right.
And in order to verify the authenticity of a transaction, you have to go all the way back in time. The computers, I'm saying they, but the
Right.
computers, and they check and verify, okay, where's this Bitcoin coming from? Is it just is it coming out of thin air, or is this something that has
Yeah.
been made? It's almost like how, like with like Newtonian physics, you can't create things out of thin air. The molecules are here.
and you were talking about the computer power that's needed
Right.
to do all this. It's enormous. I mean,
Yes, yeah.
And where is that power everywhere and just sort of solidified, or is there a place where this power resides?
Right. So in order to have Bitcoin function on its own, there's something called there's a consensus mechanism that is able to, through the decentralized network, verify and store transactions.
Yeah.
And so in order to do that, if everyone's allowed to do that and there's no way to stop people from doing it, then who's that to say anyone could go and change these things? And so Bitcoin has integrated into it something called a hashing function, right? And so when a new transaction is made and it's going to be stored and thrown into these blocks that are then updated, when these blocks have to be solved through a hash.
Yeah.
And that is, for Bitcoin, it's something called SHA-256, SHA-256, which is an NSA publicly available cryptographic function.
Oh.
And so it basically scrambles everything, right? It's like you have like the Turing machines in World War II. They were able to crack the Germans' code by like letters go in certain ways. It's like that to an absurd level. And so that is what stops any average Joe from editing it. And so in order to edit or update the blockchain, you have to have computers that can solve these codes. And so that basically makes a level of difficulty. And so when you combine that where everyone has to use those to solve these codes, in order to manipulate said ledger, you would have to have more power, computationally speaking, than 51% of the existing network, which is literally impossible.
And didn't you tell me that you better remember that hash? Because if you don't remember it, you're messed. I was going to use another word, but I decided to.
It's
go with
called your
messed.
private key. It's
Yeah.
basically like your key to your house. And
Right.
so if you forget that, yes, you're screwed, and that's
That's the word I was looking for.
sorry.
No, that's okay. That's cool.
And that's part of the thing. It's immutable. You can't edit or go back on things. That's a great thing about banks, but you have to sacrifice in some ways, and in some ways it's not a bug, it's a feature. It's by design.
Yeah, it's
all
only the
safety.
person with that key can access a wallet that Bitcoin's been transferred into. So it's like you have a digital wallet, right? And that is what cryptocurrencies get transferred into and
But
out
there's
of.
no place to go if you
No,
lose that
no,
key.
no
You
touch
are-
the
key,
you
there's
are
nowhere to
screwed.
go.
It's like when I lose.
Don't lose the key.
When I lose
Yeah.
the key to my husband's truck, then I can actually go get a new one.
Yeah.
But you can't get a new one.
You can't get a new
Not
one.
that I ever did that.
But you can make copies of keys. You know, just
Oh.
it's the same way. Well, it's a string of numbers. It's like
Yep.
the whole idea. It's a bunch of random numbers and letters, and so you can write that down, put it in a safe, put it in a
Oh,
safety
okay.
deposit box, or you know, if you use an online exchange, something like Coinbase, there is ways to get it
So
back.
you're in charge.
Well,
of
in
your-
the situations like an online exchange, you're actually giving the online exchange
Yeah.
your key.
They have
and they're
access.
storing it for
Oh.
you.
Right.
And so, like for example, Pat, you hear like stories of people early on with Bitcoin who, who lost their Bitcoin key, or it's on a hard drive that died.
Right.
Right. So what died, like the crypto itself, the currency, is not on the hard drive.
Yeah, it's on the chain.
It's on the blockchain out in the universe.
But you can't get
But
it
the key to get to it was on your hard
Right.
drive that died.
Right.
Right. Screwed.
And
Yeah.
so some people,
It's great.
there's a lot of stories of people buying pizzas, or there's a classic one, buying a pizza for 2,000 Bitcoin, which is like $400 million.
Yeah,
now,
a lot of money.
Really?
Now, yeah.
Hope that pizza
Yeah.
was good.
Let's hope so.
Serious.
But this is one of those challenges of like trying to figure out what is Bitcoin, right?
Right.
Is it a currency, which you can transact in it? So in one sense, it's a currency,
Right.
but it's also it also behaves like some sort of like asset investment
Highly volatile,
because it's
yeah.
highly volatile in value compared to the U.S. dollar and other fiat
Right.
currencies. So like, you get stories like that where you bought one Bitcoin, 10 years ago, and now it's worth $20,000.
Right.
So like what, it's hard to kind of quantify what it is because you can transact in it as if it were a currency, but you can also treat it as an investment, but really it's almost like a Forex investment, right?
Yeah.
It's like if you went to go buy euros because you're speculating that the European market's going to do better than the U.S. market, you would have lost on that bet the
Yeah.
last couple of years.
In
But
the short,
that's the idea.
in the short
right?
term, it's definitely more like it's like option trading or like foreign exchange trading.
Maybe it's both things.
Right. And it is pure in the purest sense. It is technically a currency. It follows the four defining characteristics of a currency, although it also has, because it's represented in value in U.S. dollars and it's traded 24/7, 365. It has a lot of volatility. If you were to somehow be able to chart when the Romans started using gold, if there was a way to do that, I'm sure the first 20 years gold was around was extremely volatile as well. And so as the currency matures and it continues to simply do what it was said to do since its beginning, and I talked about it earlier as far as narratives changing around technology, it's very interesting how people can get infatuated with these things that promise value. The funny thing about Bitcoin is, if you look at what was written about it when it was posted online in 2009, none of it has changed. And to me, that is a huge signal of something that is going to stay.
Yeah, because it wasn't supposed to be an asset. It was
Right.
supposed to be a currency you can transact in and have its own ecosystem. Right?
But
Right.
isn't currency an asset? What do you mean? I mean, if I have $50,000 in the bank, I
It
think
wasn't
that's an
meant
asset.
to be traded.
Or
I
a
think.
security.
It was-
It's not a security.
You're just supposed to have it, and that's your security, as opposed to.
No, I think the idea was that you wouldn't use U.S. dollars.
Right.
Ultimately, you would fully convert to Bitcoin,
Bitcoin, oh.
or some other cryptocurrency.
Right. And the idea is it goes beyond the reach of government, and it just simply exists in
Well,
its
I
own
think
world.
that's going to change.
Well, it already is regulated
Yeah.
to some degree.
I bet we're going to see a lot of regulation.
So
now.
I want to revisit this thing about the computer power. There's Bitcoin is based on what's called a proof of work model, right? Where,
Yep.
as you described it, you have all of these computers that are racing to solve an algorithm, and the one that solves the algorithm is the one that gets to write the next block on the blockchain when a transaction happens, right? Because you have this proof of work model where thousands of computers are competing against each other to solve this math problem, basically, that uses a large amount of computer power
Right.
to run this sort of decentralized network. The other model that's out there is the one that Ethereum now uses, which is the proof of stake model. So instead of having all of these computers compete, you front a certain amount of money
Right.
in order to get the privilege to write this block.
Certain amount of Bitcoin or dollars?
Whatever,
Money,
in this case it'd be
Whatever.
Ethereum, but it's whatever the currency
Oh,
is that you're
okay.
being
Cryptocurrency.
Okay.
yeah, whatever the currency is that's being transacted. So you basically have to put up money to say, I want to write this block, right? So if you get it wrong, and then there's a group of verifiers. So the verifiers say, yes, you did a good job writing this block, and you wrote it accurately. If you didn't write it accurately, you lose the money
Back
that you
to
put
being
up.
screwed.
Right.
So
It's like
This is a
collateral.
great
it's collateral is basically what it
that's
is.
a
It's
good
collateral,
one. I know
putting
that.
it up to say, I'm putting up money to say that I'm going to do this accurately, and if I don't do it accurately and I get called on it, then you lose the money that you put up.
Yeah, you lose your money and also whatever you were trying to change in a malicious way is also it's reverted.
Right. So that's what provides the incentive to not screw it up. So do you think that, Bitcoin's fundamentally not set up this way? It's set up in a proof of work model, not a proof of stake model.
Right.
Do you think that's the future of crypto, or is it more complicated than that?
Well, it's always more complicated, right? But to answer your question, proof of work it works for Bitcoin because Bitcoin is very simple. It came first. It can't be changed. It's been established as the almost like the U.S. dollar is the world reserve currency. Bitcoin is the reserve cryptocurrency, and there's no intention of it changing. That being said, for other crypto currencies and blockchains such as Ethereum, proof of stake is absolutely the right way to go for what they're trying to accomplish. They're not trying to, the other cryptocurrencies are not trying to be like Bitcoin and simply be a currency. They want, like I mentioned earlier, smart contracts, these other platforms that build on it that don't necessarily need to have as purely decentralized as it gets with proof of work. Proof of stake is not necessarily as decentralized as proof of work, given that there is an advantage to if you have more money or more crypto you can put up as collateral. There's the incentive. There's a higher chance of you being picked to choose.
The more money that you put up, the higher chance you are to be picked to write that block.
Right, and then people could point fingers at that, but then also be, living their lives as if that isn't already happening with U.S. dollars, with wealth inequality.
Right. So it's what's more likely to happen in the proof of stake model is that over time it may go from like hundreds of thousands of computers that are verifying transactions to maybe it's a few dozen computers that are
maybe
something like that. It could happen
for some, for sure. There's going to be some out there, and and that comes down to like if you do your due diligence and investors do. Hopefully they do in seeing that something as big as Ethereum that's under the microscope that it probably will not. However, we'll see what happens. I mean, the banks promise nothing. We're not going to have any banks fail again after 2008. We got it. What do you know? Things change.
Here we are,
Aren't we bailing them out, sort of?
No.
Remains to be seen.
Bigger banks are helping out smaller banks.
Well, that makes sense to me.
Yeah.
But I don't think the government, should be. That's another show, isn't it?
That's probably a whole other
that's
show.
a whole other thing too.
That's another whole thing. So Ben mentioned before, and we didn't, about wallets. And there are hot wallets and cold wallets. Did you know that? This is what I learned talking to Ethan. Could you talk about the wallet and hot and cold and how that all works?
Right. So a hot wallet would be like we mentioned with Coinbase. It would be something where your private key, your house key, is held by someone else on the internet, which is more convenient. You don't have to memorize or type in this long string, this huge string of characters. Instead, you can put in your password to your Coinbase account, and then you can send your funds. The pros to that, like I was saying, is the convenience. The con to that is you are trusting Coinbase with your key. And so if you look at something like FTX with SBF and what they were doing with people's money, those were all hot wallets. They had access to people's account information and they were playing around with it.
We skipped over to Sam, right?
Yeah,
Yeah,
Sam,
Sam
Bankman-Fried.
Fried or
SBF.
Fried? Yes, right.
Yeah, and but with a cold wallet, it's as simple as when you create your crypto wallet, you can write it down on a piece of paper and tuck it away, like I was saying, or store it on. They have encrypted flash drives that can store your key,
Oh, cool.
and those also are cold wallets too, and they're more secure, but they're more annoying. So you can think about it as if your cold wallet could be, if you were investing in cryptocurrency, would be your savings account, and a hot wallet would be a checking account.
Oh, see, I can relate to that. So we just mentioned Sam Bankman-Fried, Fried. He lost 15.5 billion in 9 days. I would like to try to do that. But I didn't feel sorry for him when I read he actually, he now only is worth 11.5 billion because he
Probably
lost.
even less.
Oh,
now.
really? Well,
Yeah.
But still billions. So my heart's not exactly. So how, no one saw this coming? He just mismanaged or?
There'll
did what he
be a
did?
Netflix documentary.
Yeah,
about it.
there'll be a
And
special
he'll
on
get some
this.
proceeds and make more money, right?
in a I guess without thinking about feelings, it is a fascinating story.
Right.
It had to do just like a lot of big failures. It had with financial or something like a Palestine Railway. There's a lot of people involved that allowed this to happen because of the lack of due diligence.
Right.
You have and none of it is really the average Joes that deposited and invested. It's not their fault. They were lied to. And so what happened is SBF, the CEO of FTX, this huge exchange, started taking people's money out of their account, which, we were talking about with a bank, that's done, but that's done with extremely secure things, and it's transparent and it's known. Like,
Right.
hey, we're gonna, it's the status quo for banks, but not for a crypto exchange. For a crypto exchange, it's expected that your money is where it is. And so
Yeah, they're not pulling assets out and investing it
Right.
somewhere else like a bank.
they already take a fee.
It's yours. It's
Yeah.
Yep. And so he started pulling that money into his his quantitative trading company that he did on the side along with his team, and they started seeing big losses. And he started to cover it up by using his own FTX cryptocurrency to basically, and there's a bunch of steps. Basically, he had his currency that was pegged to the trust and all the money that all the
Is
investors
this sort of
gave
like a
him.
pyramid scheme? This guy was
It's
pulling
almost
off?
Madoff-esque.
Oh, because that
Right.
sounds familiar.
Where
Pyramid.
you just circle everything around and
Yeah.
it works until it doesn't.
Right.
And in this case, another crypto exchange that held a bunch of FTX coin, which was the native coin that was used for SBF's company and for what people
Right.
could
This was
trade for.
Alameda Research was the spin-off company.
Yes.
Yeah.
And they did all the ridiculous trading.
Speculating that they.
Right.
Yeah.
And so basically after a while of these trades, they didn't actually have all the money that they said they did, but that was okay because no one was going to take their money out. But it kept getting worse. And so as it got worse, SBF was abusing his currency that he had to basically guarantee and create more loans. And someone called their bluff, or not someone, Binance, another exchange, they sold all of their holdings in FTX coin, which immediately destroyed the trust of that coin.
Right.
And thus a lot of the value in SBF's net worth was pegged into that. And so it wiped it for everyone. And
Where is this gentleman now? Is he
Bahamas?
away somewhere?
Bahamas.
He's still in the Bahamas?
He's hiding and
Oh, wonderful.
in denial. Or
Well, I
whatever
hope he
is.
has. But he only has 11, maybe a little less of billions left.
No,
so-
he has way less
Oh, does
than
he?
that. But
Yeah,
people,
it's like, so basically I think probably a good way to explain what happened is like, so they were doing something like what banks do, right? They were trying to pull that money out without telling
Yeah.
without telling the account holders that's what they were doing.
But let me ask you, you said that you can go anytime you want online and it's all available. So the investors were not doing what they should have been doing and checking every so often.
So this is the problem with the exchanges, is that the exchanges work like sort of like banks.
Right.
So when you give the key to your
Right.
wallet to an exchange, do you really own it anymore?
Oh,
It's the same thing when I go to put that dollar into my local bank. Do I really own that dollar?
Or it's like when you in some ways not the tool, but like mortgaging. You don't really own your house technically.
right, no, not till it's paid off.
Right, and then back in the day, people were playing around with your mortgages in
Right.
terms of betting. But yeah, basically he did a bunch of ridiculous trades with people's money that he shouldn't have, and no one was there to catch on to it until it was at the very end.
until
and it was
one of
too
his
late.
competitors figured it out.
Yeah, and they cracked the
And they-
code.
He
And
was,
they
he
called
was
him.
living the high life there. I read about
Yep.
how he spent some of that money, not too shabby.
Yeah,
know?
and it's interesting though. I mean, just a side note. There's this funny story. So a lot of the money and a lot of the celebrity partnerships and the vast growth that this company had came from venture capitalist money or startup funders.
Right.
And so he got over $1 billion of this money. And there's a story that on one of these meetings with a very famous venture capitalist firm that was providing him they were having a deal to give him $200 million for a stake in FTX. $200 million, a ridiculous amount of money. And apparently the whole time SBF was playing video games on this Zoom call. And does this like represent everything that this was? No, but to be a very respected an investor,
Right.
and to not catch on to the fact that he's looking away the
La,
whole
la, la,
time, and there's this
right.
lack. It shows a lot of people were very captivated. VCs are not the type of people to just give
Right.
money to anything, and a lot of people were just infatuated by who he was and saw him as just as Elizabeth Holmes was for Theranos.
Interesting. Because how much does a Bitcoin cost these days? They're like millions and millions, right? No.
No, it's a lot. It's like what, 26,000?
It jumped. I think it's like mid
Ethan
20s.
said you can buy a fraction of, because I said, how can I afford something like that? He said, you can buy a fraction of a Bitcoin.
Yeah, you
Yep.
buy like a tenth or something.
Yeah.
Yeah,
if you wanted to.
infinitesimal almost.
Yeah, that would be me for my $100. I mean,
Right.
But I could say I owned one. That's cool.
Right.
Yeah, I think it's it's interesting. I think obviously the whole FTX collapse last year was a kind of a big wake up call for regulators. Now today we're starting to, within the last week or so, we're starting to see traditional banks failing.
Right.
I think a lot of people were kind of holding their breath when FTX went down. Like, I was like, oh boy, all right, is this going to cause a chain reaction? FTX was like one of the big boys. Like, they were one of the biggest exchanges out there.
Right.
And that didn't really happen.
Yeah, you had a few on the fringe.
There was a few on the fringe that went down. I think
Banks,
sort of.
you said?
No.
Bank-
No,
Bitcoin.
crypto exchanges.
exchanges. And now I think we're sort of in a similar situation with traditional banks, like very similar situations to what happened to FTX. They made some risky investments, didn't have the liquidity.
Yep.
They got called, and now are getting bank runs, like
Right.
what happened with Silicon Valley.
Right.
Where are we today?
Yeah, what are we supposed to Us normal folk, what are we supposed
Well,
to
us
do?
normal folk that have less than $250,000 in the
Yeah,
bank probably don't have much to worry about. But
I think it's just, I mean, I wasn't really, I was alive, but I wasn't really conscious for 2008. But from what I've learned about it, it seems like
it was panic.
it's
I was
and
here.
that was different, and I'm not but the it's more of I thought we learned our lesson with banks. That to
Right.
me is absurd. And I'm not gonna like bring this back to look at Bitcoin and this and that, but I find it kind of funny that after all these promises were made that, the banks will stay stable, we loosen regulations, and as a result, now you're seeing the full speculative force of what human nature can do to even the most stable, or supposedly stable, financial institutions, which is ironically giving banks a bit of the crypto treatment as far as how speculative that can be as an investment.
Yeah, well, it turns out like the Silicon Valley Bank was very speculative,
Right.
And you learn this after the fact.
And you learn this after the fact, right? And this is
So
I
how do
think-
you avoid getting defrauded? I mean, how do you avoid fraud in this whole market? And is it easy to be, what's the word, defrauded? I don't know, defraud.
Well, I think the bigger issue, well, for banks specifically, I think the bigger issue is businesses, right? I mean, the most likely depositors to be over the FDIC insurance threshold
Or businesses.
is businesses. And
Right.
you just think about payroll alone, right? Even a moderate sized business, even in Vermont, could
Right.
easily have $250,000 in payroll that goes into one account at one time.
Right.
Right. And if a bank happens to get called, like while you have that money in a particular account,
It's gone.
you're in trouble as
Yeah.
a business, because now you can't make payroll. All that money you were going to use for payroll is gone, potentially. And that's the bigger problem, I think, for most Vermonters. But there is a secondary problem of like, for consumer protection, sort of like, what do you do to avoid a cryptocurrency scam? Like, I'm buying real cryptocurrency, right?
So this thing was designed not to have government control. Given all the things that have happened, do you think the government is going to find a way to exert control over Bitcoin, or should they maybe just let it ride the way it is?
I mean, they tax you for crypto, which is completely reasonable if you're investing in it. But outside of that, it's give me a 10-foot wall, I'll give you a 12-foot ladder. Like, good luck. Try.
Yeah, right.
They trust me. There's
Oh,
no
so
way
they-
they haven't tried.
okay.
It's a lot of money, and
Interesting.
it's in some ways an
They
existential
can't get
threat.
to it, or they don't know.
Yeah, and even banks
So
too.
how do you pay
don't-
taxes if you can you hide the amount that you have from, who's going to check?
No one's going to check how much you have.
So it's the honor system?
No. Well, it all comes down to your gains and losses that are realized, right? So if I buy a stock and just keep holding on to it, I'm not going to pay taxes on it until I
Until you do
decide to
something.
sell, and that short-term, long-term capital gains, yada yada yada. It's the same thing. So if you want to trade practically, and you want to trade cryptocurrency in a way that like someone would trade stocks on a professional or a high level, the only platforms you can really do it on, the government already made sure they're doing they're recording
Right.
these things, and so it's
Is there
it's
a
all
way to
set
make,
now.
you said short-term, long-term gain, is there a way with Bitcoin to make short-term gains, to do whatever you do and then get out and you've made money?
yeah.
There is.
Well, when I was in high school, and I'm not saying it's easy, this is just a funny story. When I was in high school, I bought Bitcoin, and long story short, I ended up getting my car from it, which was great. Could have held it on, whatever. But I was in an AP psychology class checking Bitcoin, and this is when it was booming to $16,000, which was absurd at the time. It didn't reach that level until 3 years ago. It did. So when I was 16, that was 2016. And so I was in this class, and Bitcoin went up $3,000 in the class I was in. I didn't have a whole Bitcoin. I want to
Who's
make
the
that
kid
clear.
yelling in the back of the room, right? Yay!
Oh yeah, it was more like I told you so. Like, look what's happening. And then it actually, the next 2 days, it went down a lot.
Yeah.
So to answer, yes, you can, but
You have to time it just right.
yeah, you got to.
Yeah, because I know when you and I last
It's like
talked,
sports betting. Vegas always wins in the end. You can try your
when
best.
you and I talked last time, I had checked the internet and I was, Bitcoin fell 11%, and so it is pretty volatile, isn't it? Up and down, and
Yeah, to be
So
honest, for a crypto investor, that's nothing.
that's nothing.
Yeah, you're just used to it. Like when I see when I first started getting into, because I study finance and I'm really into fixed income and bonds. but also into stocks. When I saw Dow Jones goes down 3% or 4%, and it's a headline, I was like, what does that mean? What's the point?
Yeah.
That's like a really big
Because
deal.
you have to be in it long term to not panic, though, right? I mean, if
Yeah.
you're in, you should be in it, even Bitcoin, for whatever the long term means.
Right, you
Because
know,
you'd go crazy every day looking at it going up and down and.
so just like
Yeah,
stock
right,
traders.
right.
You know,
Yeah.
most people, if you're a casual person, it's probably best to not be trading left and right. You know, you got to educate
Leave
yourself.
it there and sit on your hands.
Yeah,
So-
exercise a little patience.
For people watching this, I'm interested. What do I do? I have $10,000. I don't. But I have now. What do I do? What do I do? How do I know the right place to go? And
You buy bonds.
Yeah.
yes, I actually do more bonds than stock. I don't like the stock market so much.
Right. Well, okay. I'll say this: especially if you're young and you have an allocation for higher risk or high growth stocks,
Right.
you gotta look into Bitcoin. You gotta look into cryptocurrency. That's as
It is
far
the
as I can
future.
go as far as like recommending, because
Yeah.
I'm not certified.
Yeah. But you find a place.
Oh, right.
Is it a house? Is it a name? Is it an entity?
Oh, Coinbase,
Coinbase.
website. It's publicly traded on the stock market. It's been filed by the SEC.
Okay.
It's very safe. And then if you want to do the extra steps, you can Google and look up cold wallets and like hardware wallets. And that's a good thing to do as well. But that being said, just practicing the same practices you do with your bank account and your credit card on something like Coinbase, you're pretty safe. I mean, that being said, what
is
have we just been talking about?
Yeah, what is
Like-
safe?
Safe.
Like FTX aside, they weren't audited.
No,
They were in a they're way less trustworthy than Coinbase. But you still have banks now. They're getting crushed a little bit. But yeah, I'd say the safest way to look or to buy it is Coinbase, but don't even buy it before at least doing some due diligence.
Right. Yeah, you have to feel this is very complicated. You see it, so you understand it, but
And if you have $10,000, don't invest all of it.
yeah, no, well,
You
that's what those
diversify.
guys.
Diversify is the key.
Right,
Yeah, exactly.
Put it in a lot of different things.
Yeah.
Anyway, Ethan, thank you very much. This was fun. Told you, he's a smart kid. We have 2 minutes. You have any wrap up for people? Just
Let me think. I would
take a chance. So it's just
Okay, well, one thing I do is if you don't know what I'm about to say, you have to check it out. Is Google Chat GPT and then play around with it. I love technology, and so something other than Bitcoin that I've been really into is, of course, this AI language module. And like we were saying, don't take it too seriously, but explore it. It will blow your mind. And then also to find me on LinkedIn and connect with me
Cool.
if you're interested. Yeah.
nice. Thank you for that.
3.5 million users in 48 hours.
Right.
Chat GPT.
Enough said.
Yeah.
What are you saying? Chat
Chat GPT.
GPT.
gained
It allows you to
when
play
they
around
want.
with it?
We'll show you.
Gotta go
Yeah.
show.
Yeah.
Yeah, we'll do a whole other show
Yeah,
on
we'll
that.
do it.
We could do a whole show
It's
just
always
on
good
that.
to have somebody like me who knows absolutely nothing, kind of, make the conversation, ask the questions like, what?
Yeah, but
What
they
are you
had 3.5 million users in the first 48 hours after they
Wow.
launched.
Yep.
Yep.
Amazing. All right, thank you all for tuning in. We'll see you next week. This is Pat McDonald.